Hello everyone, I'm CMA Mohammad Alda. Hope all of you are doing good. And I was thinking about doing a video on these recent amendments that is applicable for your new exams. Anyway, this video will help you to revise your GST that is applicable for CA November 2000 exam and November 2020 exams and the CMA December 2020 exams. So what I'm going to do is that I will revise the entire GST provision with all the applicable amendments. I'm going to do is that I will share the my computer screen, so that in that my GST material will be there, so you can just look into that, and we will do a first revision on the all the entire GST provision within few minutes. And and I want to tell you another thing is that we are actually going through an unprecedented difficult situation because of this corona. And there is a lot of mystery how the institute are going to conduct the examination. And I'm sure that all of you might be thinking that whether the exams is going to happen or not, whether the exam will postpone, etc. My strong recommendation and sincere suggestion to all of you that don't get into all those difficult thinkings. Okay, that is the institute's duty to conduct the examination, that they will take the risk. Your duty is just to study, so keep quiet, and you have to focus on your study. Anyway, we will directly go to the GST revision, and hope this video help all of you to revise the GST properly. Okay, so we'll go to the GST revision session.
Okay, so we are actually begin our discussion on the GST, and this is my material. So I think if you have my material with you, it will be very easy to capture the amendments. Otherwise, also if you refer any other material, also you can capture material. But the thing is that you have to cross check with other materials. Okay. So anyway, I'm just clarifying this again. This is a disclaimer, because in this video I'm not going to discuss the entire concept of GST, because I'm here to explain only the amendments that's been applicable, that's been done on the GST part. So I'll be discussing only where the amendment is done. Okay, so anyway, I'm just showing you the entire things, and wherever amendments is done, it might have highlighted in a blue letter, so you can easily identify. So these are all those are not having my material for your information. I've given exam analysis, and I've also given some analysis on which all part is important, and this is very important chapters. This is medium level, and this is very less important. So anyway, in the discussion one, all of you know that you have discussion one, introduction part. In the introduction part, there is no amendment. This is not at all important for examination. Why? Because this is already, I think, 5 to 6 attempts been done after introduction of GST. So there is a very rare chance of asking question from this area. So I'm not going to discuss anything from this first chapter. Because there is no amendment, there's nothing important to study in this chapter. Okay. Now the second chapter is that levy and collection supply, and it's contained two section, mainly section 7 and section 8. All of you know that section 7 and section 8. Anyway, now listen. Here you can see that section 7 and 8. Section 7 talks about the supply, and section 8 talks about the compost and mixed supply. So let's discuss. Let's see any amendment is there for your exams. Okay, section 1 talks about the basic condition for supply. It must be goods services for consideration, and it must be in the course of furtherance of business. There is no amendment happened in this section 7 also, but one thing happened there in subsection 2. Subsection 2 talks about the you can learn the section 7 very easily. Section 7, subsection 1 says that it has 3 conditions. Okay, I'm not going to discuss in detail 3 conditions. That is, this is the 3 conditions to qualify any transaction supply. And subsection B talks about the exception to the clause A. That means importation service will be treated as transfer, will be treated as supply, even when there is no even it is not in the course of business. And clause C talks about the schedule 1. Schedule 1 is actually transaction which is treated as supply even without consideration. Correct? Now, so this is the subsection 2, and the subsection 2 there are small amendment they're done. That's it. They're saying that in case of alcoholic liquor, all of us know that alcoholic liquor is not actually liquor is actually it's not a supply. Like if you're supplying alcoholic, that actually not supply. No, now what happens is that, listen, now alcohol is there, so this is not supply. But what happens when the government issue license? When the government issue license to the contractor who dealing in the alcohol supply, that license were earlier liable to GST, but now they're actually amended. They saying that that license by government to the contractor for carrying out the alcoholic business, that is also not chargeable to GST. That is a new amendment they've done here. So you can just learn that also. So this is the amendment that only that happened in section 7. Nothing else. Okay, that's the only thing you have to newly study. That's only thing. Okay, but this amendment is not applicable for other kind of license. For example, like spectrum licenses, telecom, other like what is a mining license, etc. That all still liable to GST. Only thing is that this is the license to supply alcoholic. Okay, so that is the one thing you have to understand. Next thing is that amendment is happened here. This is not a amendment. The clarification. I'll tell you the logic behind the clarification. Okay, suppose a person. Okay, you can just imagine you as a person who is very generous person, who is actually very fond of charities. Okay, so I'm just calling is as Mr. A. Mr. A is very generous person, and he contributing a huge amount. Suppose for example 10 lakh rupees he is contributing to a charitable institution. So this charitable institution is very happy because they're getting 10 lakh rupees from Mr. A. So what they done is that they put a photo of Mr. A, and they've they put a banner in the compound of the charitable institution, and then they've given the like, thank you Mr. A, you are so generous person, you are great person, etc. So they give a banner here. So department is clarified that somebody might have raised a doubt that can we call this as advertisement, because Mr. A given 10 lakh rupees and the charitable institution is publicizing him. So can we call this as advertisement charges because they are publicizing him? So can we call it as advertisement charges? If we call this as advertisement charges, what happens is that this will be liable to GST. Okay, now they clarified that this is not actually advertisement purpose, advertisement things. Okay, so this is not chargeable to GST. But my opinion is that if any business elements is there, then actually so suppose Mr. A, they while putting the banner of Mr. A, they also given a description that A Limited is the company of Mr. A or his whatever his business organization. So if they put the Mr. A Limited's information also, we can call this as a advertisement actually. Okay, so if that's the case, I think in my opinion that will be chargeable to GST. Okay, fine. Anyway, as a student, you have to just write that this is not liable to GST. So that is the another thing you have to understand. And another thing is that these are all we will discuss in the regular class only, because I'm here just to explain the amendment that has now happened in the GST, right? Okay. So this anyway, this actually I'm just giving you that this is the schedule 1, like schedule 1 things, and now schedule 1 is the schedule which talks about you that transaction which will be treated as supply even without consideration, because the basic condition to treat any transaction supply is that the supply must be for a consideration. But schedule 1 listed only 4 cases, because anything other than these 4 cases will not be treated as supply unless there is a consideration. So this is the 4 things, but there is no amendment that is applicable for your exams. So don't worry. Okay, you are happy now. Because there is no amendments. What all things you have studied so far? It's the only thing that is that for the next exam also. These are all already existing. Circulars, nothing new in that. So I'm not going to explain that. The next one is schedule 2. Like schedule 2, the purpose of schedule 2 is that before GST, introduction of GST, what happens is that there were a lot of confusion regarding some transaction, where you will be getting confused whether this transaction is supply of goods, whether this transaction supply service, because in the same transaction you might be supplying both these goods and services. So schedule 2, the purpose of schedule 2 is that they actually list out some confusing transaction, and they itself is saying this is actually what we say supply of goods, this is actually supply services. So that for clarifying that they have inserted schedule 2, nothing important in that schedule 2. Next one, Schedule 3. Like, Schedule 3 is a negative list. Why it is negative list means because if any transaction coming under this Schedule 3 will not be treated as supply. Okay, that is the negative list concept. So anyway, here also some amendments is there. We'll see that. This is all, you can just go through that. Okay, Schedule 3. Okay, that actually not for your exam. Actually, earlier it was amended, this one, merchant trading, etc. So this is not the new amendment. Okay, so anyway, next one is amendment is let's see, composite and mixer supply. There is no amendment, so happy. Okay, so in supply only one or two amendments. That is very easy amendments, right? Okay. Now next chapter is that levy and collection charging. So let's see any amendment is there. Section 9. Section 9, actually, if you classify section 9, it will be very easy. Section 9 talks about the levy and collection. Levy and collection means who has to collect the GST, okay, who has to charge GST, etc. So if you classify section 9 into 3 categories, one is normal cases. Normal cases, the supplier has to pay the GST, that is FCM. Subsection 1 talks about the FCM. Subsection 3 and 4 talks about the reverse charge mechanism. I think all of you might be knowing that, or I hope all of you might be knowing that reverse charge mechanism. And ECO, and subsection 5 talks about, that's not an RCM in fact, because ECO has to pay the GST in some situation. That is given under 9 subsection 5. That is given here in detail. You can just go through that, because there is no amendment as such happened in section 9. Section 9, section 1, 2, 3, RCM 4, RCM. There is a subsection 4 that has actually amendment is happened, but not for your exam, previous exam. Anyway, I'll explain that, because I've written over here that refer below, because I've given below that what all things are coming under 9 subsection 4. Types of RCM. Types of RCM under GST. There are 2 types of RCM. I told you that 9 subsection 3 RCM and 9 subsection 4 RCM. The main difference is that 9 subsection 4 clearly says that the supplier must be unregistered person and the recipient must be a registered person. There is no such concept here for 9 subsection 3. 9 subsection 3 is that is also, both are talks about the same concept RCM. But the thing is that 9 subsection 3 does not says that the supplier must be unregistered and the recipient must be registered. 9 subsection 3 says that when these specified goods or services, always recipient has to pay the GST. That's it. Okay. So anyway, that's the difference. So you can see some goods are notified for this 9 subsection 3 purpose that you can just go through, because there is no amendment, because I'm here to explain amendment. That's why I'm not explain all those things. And service cases, you can just go through here. There is no reason amendment. Reason amendment is that this is actually amendment happened. That is, but for previous attempt. That is why I given in a highlight, because that is happened for previous attempt. Or you can just go through that. A reason amendment only I'm going to discuss. Okay, here all there is no amendment, and okay, here amendment is there. Okay, section entry number 9A. What is amendment is that, see, I told you that 9 subsection 3 is more or less is a compulsory section. That means it says that it uses the word shall. That means in these case of services, the recipient shall pay the GST. That means supplier cannot say that, okay, I will only pay, you don't have to pay, I will only pay, no problem, because government is anyway getting the GST. That is not acceptable, because 9 subsection 3 uses the word shall. So anyway, these services, okay, that a service by author, music composer, photographer, artist, or the like. So in this situation, suppose Gobi Sundar, that is a common example that I make in all the classes. So Gobi Sundar, for example, he is actually made music. Okay, he composed a music, and now he's selling that right to a producer, for example, Anthony Perumbavoor. So what happens is that here the supplier is Gobi Sundar, but the recipient is Anthony Perumbavoor. So the person liable to pay GST is Anthony Perumbavoor. That the uses word shall. Okay, that means Anthony Perumbavoor has to pay the GST. Gobi Sundar cannot say that I will only pay. Okay, that is not possible. So here entry number 9 covers the author also. So for example, I'm giving imagine what is out of my imagination or out of my dream. And for example, I've written a book here. So my book, for example, got lot of publicity. So what is that taxman publication? Suppose taxman publications coming and say that we will publish your books. Okay, so here the author is Altaf, right? Author is Altaf. Here what is this entry number 9 says that, so I will sell the right copyright to taxman publication. So the supplier is Altaf and taxman publications recipient. So the person liable to pay GST is taxman publication. So earlier it was the mandatory thing. That means taxman publication has to pay the GST. Altaf does not have any option because there is no such concept. Okay, but entry number 9 is that it is an option. Okay, they're given an option to the author that author may pay the GST. Okay, may pay the GST under forward charge mechanism. Entry number 9 says that author is the supplier, publisher is the recipient, and publisher shall pay the GST. But under RCM, but they are given a relaxation here that you can read. Author may choose to pay. That is an option given to the author. That means supplier may choose to pay the GST under forward charge mechanism. But there is some condition they given here, that is the author must be a registered person, etc. Okay, so that is the amendment that happened in RCM. Okay, that's all. There is no other amendments actually. Okay, here okay, these two amendment is there. 15 and 16. Entry number 15 and 16. Entry number 15 says that service by way of renting of motor vehicle to a body corporate. Okay, so what I'll do is that actually I've given an analysis for this. Okay, this motor vehicle, renting of motor vehicle. So the important condition is that the supplier must not be a body corporate, other than body corporate, and the recipient must be a body corporate. Okay, that is the one condition. So I'll do is that I'll show you the analysis I've made on these renting of motor vehicle, that you can just go through here. Okay, so renting of motor vehicle. So you can just read: a person engaged in renting of motor vehicle, passenger vehicle, where the cost of fuel included in the consideration charged from the recipient, has two options. So the supplier is the person who is giving it on rent, and the recipient is the person who taking it on rent, right? So the supplier has two options. They can either choose 5% without ITC, 12% with full ITC. Okay, so that's the two options. So the RCM applicabilities depend on supplier opted which option. Okay, so I'm given here this one. So for example, supplier is a body corporate. If the person who is giving it on rent, giving the vehicle on rent is a body corporate, the RCM provision is not at all applicable. Okay, so always payable under FCM. So this is not applicable under RCM. So when the supplier is other than body corporate, then only RCM will be applicable. But there are two options. As I told you that supplier has two options: opted 12%, opted 5%. If the supplier opted 12%, there is no RCM concept, always under FCM. If the supplier opted for 5%, then also we have to see who is the recipient. Who's the recipient is a body corporate, RCM. If the recipient is other than body corporate, then no RCM under FCM. Okay, so this is the RCM all of you have to go through, because this is a recent amendment that is happened. Okay, so you can expect a question from all these things. Okay, fine. Now that's another amendment happened in what we say RCM. And entry number 16 is a service of lending of security under Security Lending Scheme 1997. Here the supplier is a lender and the recipient is borrower. The borrower has to pay the GST. And at inter level, you guys don't have to refer this lending security scheme because it's not there at your inter level. So final students may refer this entry number 16. So this is the 2-3 amendments that is happened in RCM. So that also happy, because there is nothing to worry. Okay, because only 2-3 amendments happened. So study that amendment properly. Okay, just follow the other things that already you studied. Okay, fine. Now I told you that there is another RCM 9 section 4. 9 section 4 RCM is there. So earlier we had another RCM called whenever a registered recipient purchases from unregistered supplier, the registered recipient has to pay the GST under RCM. But that is not there now. That is removed way back in 2017. So anyway, but now they have actually introduced a new way of 9 section 4. Okay, here also the important concept is that supplier must be unregistered, and the recipient must be a registered person. The recipient must be a registered person. That is the one condition. But in this combination, earlier everything were liable to RCM, but now it is amended that only 3 cases. Only 3 cases is actually coming under this 9 section 4 RCM. So in order to understand the 9 section 4 RCM, what you guys can do is that you can just make a screenshot of it and read this case, read this concept clearly, because this RCM, actually transaction for RCM is coming from that condition actually. Anyway, I'm not going to detail discuss that anyway. So anyway, I'll tell you that what all things are covered under transaction for. They're saying that if the contractor, promoter, you can just just connect that it's a contractor purchase less than 80% from unregistered person. For example, a contractor for constructing a building, he requires 1 crore rupees material. So what he done is that he has purchased 90 lakhs material from the registered dealer, and what he done is that 10 lakh from the unregistered dealer, 10 lakh from the unregistered dealer. Okay. In this combination, there is no problem, because they're saying that at least 80% should be purchased from the registered dealer. We have purchased 90%, so no problem, no RCM. But for example, out of this 1 crore material, you have purchased 70 crore from the 70 lakhs from the the unregistered dealer, but 30 lakh from the not like that, 70 lakh from the registered dealer, and 30 lakh from the unregistered dealer. Okay, I hope I've said in the previous example also the same combination. If I've told in reverse, you have to connect in this way. So for example, 70 lakh he purchased from the registered dealer and 30 lakh from the unregistered dealer. Okay, so what you have to do is that here 80%, that is 80 lakh, must be purchased from the registered dealer, but he purchased only 70 lakh. That means there is a shortfall. Shortfall is 10 lakh. 10 lakh, how you go to 10 lakh? 80 minus 70. That means that 10 lakh. On this 10 lakh, you have to pay the RCM. RCM rate is 28%. I'm not given here 28%. Okay, this is the RCM. This is not a recent amendment that happened for the last exam. So anyway, I'm just mentioning here. Okay, that is the another thing you have to understand. So this is the total amendment that happened to RCM recently. Okay, fine. That also done. That also done with. I've given many analysis here, and that all you can go through. Okay, because there is no amendment as such happened on those things. So this is that's another thing I want to tell you. Next one is composition levy. Okay, section 10. Section 10 is a composition levy, and composition levy you can expect question from these areas. The reason is that they have made a recent amendment on this, but they couldn't ask an exam because exam got postponed. So you can expect question from these area, composition levy. So composition levy, I'll tell you the background. Composition levy introduced with a view to help the small taxpayers. Small taxpayers means their turnover limit, turnover does not exceed a specified limit. Okay, so that is the one thing you have to understand here. Now, and also the composition levy actually meant to a supplier of goods. When composition levy introduced, it was actually meant to a person who exclusively supply the goods, not for the service provider. Okay, but recently they amended and they've given the benefit of composition to service providers also, that we'll discuss anyway. So there are two things happened. There are two amendments. This turnover they changed in the last attempt itself. So you can go through the turnover limit, and I'm not going to do that. I'm just giving the recent amendment that is happened. Here, listen everyone. One amendment is that in computing the aggregate turnover. Okay, sorry, not turnover instead. What is the different? Okay, anyway, by the way, I'll tell you the difference between. They are actually giving aggregate turnover. Two terms they are actually using in that this. One is aggregate turnover, and another one is that turnover in a state. This is the two turnover in a state. This is the two things they are actually using in section 10. So let's see what is these two terms means. Okay, suppose a person has 2018-19. We are actually in 2019-20. We are actually in 2019-20, and the person have to choose composition for this 2019-20. So whether he is eligible or not, for that purpose we have to check the previous year, that is 2018-19. In the previous year 2018, we have to take the aggregate turnover. What do you mean by aggregate turnover? Aggregate turnover means, for example, this person has two branches, one in Tamil Nadu, another one in Kerala. So we have to add up the entire thing. Entire things, for example, Tamil Nadu has some 50 lakhs and Kerala has some 60 lakhs turnover. So aggregate turnover comes to 110. That means 110 lakhs. That means he is eligible. Once he is eligible, he can opt for composition, and he has to pay the GST on the turnover in a state. Okay, turnover state means what we say turnover in that. For example, if you compute the Kerala composition, for example, the first quarter Kerala has a turnover of 10 lakh. So apply the rate 1% on 10 lakh, and the Tamil Nadu separately you have to do. That is the difference between aggregate turnover and turnover state. Aggregate turnover you have to look in the last year. Turnover state you have to look in the current year. Okay, because in the turnover in the state only you have to apply the composition rate. That is the main difference. Okay, anyway, there is a small explanation given. For the purpose of this section, turnover in state or unitary shall not include supply made from 1st April of the financial till the liable for registration under GST. What they're saying is that suppose you actually were not liable for registration. You are not a registered person till here, but in 2019-20, for example, 2019-20, somewhere in suppose in September, okay, in 1st September 2019, your turnover crossed 20 lakhs. That means you're actually, or the 40 lakh, okay, you're actually liable for composition, registration. Okay, and what they're saying is that, and in your 2019-20, your total turnover comes to, for example, 140 lakhs. Okay, 140 lakhs. So they're saying that while computing the GST, while computing the composition GST, you can ignore, you can reduce this 40 lakh. So that means you have to compute the GST only on 140 minus 40 lakh, that is 1 crore. Okay, you have to compute the GST only on 1 crore and not on the entire 140 lakhs. Because they're saying that supply made from 1st April of the financial year till the liable for registration. Till liable for registration, you're actually having 40 lakhs. Okay, so that you can reduce. That is a one amendment made there. Another thing is that turnover in a state does not include what we say extending deposit, loans, advances, etc. Because consideration is interest. Okay, so if you got the interest from a bank, you don't have to compute the GST. You don't have to compute the composition GST on that interest portion. Okay, that is a relaxation they given. So this is the amendment that happened in subsection 1. Subsection 2, this is not happened in for your exam. This actually happened in the last attempt. But anyway, this is still it is important because they couldn't ask much from this area because exam got postponed. Okay, anyway, now listen. What they're saying is that I told you that the composition concept is introduced with a view to have the supplier of goods. But now the composition benefit is extended to supplier services in two ways. In two ways they're actually extended this benefit. One, for easy sake, I am just calling it as normal. Another one is special. Okay, another one is special. What the normal says that suppose a person has some for example a 70 lakh goods. Okay, in the last year he has 70 lakh goods supply, and suppose he has a 5 lakhs services, supply of services. Earlier, if he is supplying the services, he is not eligible for composition. But now they're saying that just merely he is supplying services is not ineligible. That means he is still eligible for composition. But we have to check whether the service is within the permissible limit. What is permissible limit? Permissible limit is this one. Permissible limit is 10% of the turnover. Turnover means 75 lakh. What is the 10% of 75 lakh? 75 lakh into 10%. That means 7.5 lakhs. 7.5 lakhs or rupees 5 lakhs, whichever is higher. That means permissible limit is 7.5 lakh. That means he can supply service up to 7.5 lakh, no problem. He can supply service up to 7.5 lakh. So here he just supplying only 5 lakh service. That means he is still eligible for composition as a normal composition. Okay, so that is the one relaxation that I given here. I hope all of you might have studied that, because that is that amendment happened for the last attempt. Okay, another relaxation is that he suppose he is actually exclusively providing services, 40 lakh services. He not supplying any goods. Okay, so by going the normal composition, he is not eligible, but he can still apply for a special composition. For easy sake, I'm saying special composition because the condition is totally different. Here the rate of GST will be 6% and the turnover should not exceed 50 lakhs. Okay, so if these two, if the 50 lakh does not crosses the 50 lakh total turnover, then he can opt for composition. So the composition rate will be higher, that is 6%. And this is applicable for a person who exclusively supplying service also opt for this. Or for example, a person supplying some suppose 40 lakh 40 lakh goods, 40 lakh goods, and services 10 lakh. So let's check whether he is eligible for normal composition, because normal composition says that service should be within the permissible limit. Permissible limit is that total turnover is coming to 50 lakh. So 10% of the 50 lakh is 5 lakhs or rupees 5 lakh, whichever is higher. So that comes to 5 lakh. That means the permissible limit is 5 lakh. He can supply service only up to 5 lakh, but he is supplying 10 lakh. That means he is not eligible for normal composition. So anyway, he can apply for the special composition because the aggregate turnover does not exceed 50 lakhs. Okay, does not exceed 50 lakhs. So he can opt for the special composition by paying the 6% GST. This is the important thing you have to understand in the composition. That is the only thing you have to remember in case of composition, that you can just go through that. Okay, that's it. Next one is that manufacturer of supplier of aerated waters, that also ineligible person for composition. Okay, any nothing else. That is only amendment that is happened in composition also. There is no other amendments. Exemption, speaking, actually there is no much amendment happen in exemption. So it is very easy, because if more amendments came in exemption, that will be difficult to catch hold of all the amendments. But anyway, luckily there are a lot of only few amendments. So just we can go through that. Here there is no amendment. Charitable and charitable, there is no amendments. Agriculture related activity, small amendment, that is service by storage, warehousing, cereals, pulses, fruits, nuts and vegetables, spice, copra, sugarcane, jaggery. So the storage and warehousing of these things are actually they have specifically exempted. So that is one amendment happened. And education service, there is no much amendments. There is a clarification that you can just go through. That's not an important clarification that you can just go through. And health service also, there is no much amendment. There is no amendment at all for these attempt specifically. Service by government, this is not a recent amendment that actually happened in the last attempt. That is, earlier they had some limit here. Okay, 20 lakh, the limit they given, but that was so confusing because that was so confusing. So they removed that word and they said that a business entity up to such amount, which is he's eligible for exemption. That means simply means unregistered business entity. Unregistered business entity. I think all of you might be knowing that. So that is the only amendment. That also not recent, not amendment happened for this attempt, but last attempt. Okay. So this is an analysis given for the government related things. Okay, that's a exhaustive analysis. And construction service also, there is no much amendment. There is no amendment. And passenger transportation, there is no amendment. Goods transportation, there is no amendment. GTA service, there is no amendment. And banking service also. Banking service, actually, there is no amendment as such, but they've given a clarification that whether the interest on EMI is eligible for exemption, but they clarified that interest on EMI is not eligible for exemption. That is the clarification. You can just go through the example here if you want to hear. Next is that LIC and there is no amendment here. Okay. Now leasing service. Okay, there are leasing service. Actually, there is amendment. Okay, leasing service one time upfront amount calls premium, salami, cost price, etc. Long-term lease by government. Okay, so what is thing is that, for example, government has given on lease its industrial plot. Okay, industrial plot to a business entity for industrial purpose. Okay, so here the any other entity having 20%. That is a small amendment they've inserted. But importantly, what they done is that earlier this total lease. Okay, whenever the government giving it on lease to a business entity for industrial purpose, the entire amount was exempted. Entire amount was exempted. But now actually now also it is exempted, but they inserted some condition, because earlier people started misutilizing. Okay, they will take the land for the industrial purpose and as a lease, but actually later on they will convert to some other purpose. So in order to curb those situations, government actually inserted some condition. That's a condition actually. That is a new amendment that you can just go through that condition. Okay, that is the only amendment that is happened. Next one is that here also the same amendment that earlier we discussed, that 20 lakh, that wording they have removed. Instead, they have actually given that such an amount in the preceding previous year asset make eligible for exemption, that is unregistered business entity. And sponsorship, that is there is no amendment. Skill development, there is no amendment. And performance by artist, right to information. Okay, FIFA under 70, they actually inserted ticket to FIFA under 70 Women's World Cup, that is exempted, but we have to look forward whether that will happen or not, because of the COVID. Okay, so here also they given a new amendment: service by way of giving on hire to a local authority an electric vehicle, okay, to carry more than 12%. That rent also fully exempted. Okay, that is another amendment. So this is the only few amendments and that happened. Service by okay, what is that in the FIFA? Okay, service by FIFA for with respect to that under 17 Women's World Cup that is going to organize in India. Anyway, that this is the only few type of amendment that is appending exemption. So you can just relax because there is no much amendments. Only 2-3 amendments that we discuss in exemption. Okay, why I'm just scrolling the ender things. Okay, instead of just discussing the amendments part only. It will boost your confidence. Otherwise, what happens is that you will have that feeling. Okay, whenever you study something, okay, you will have that feeling that okay, there might be some amendment happen. So I'm just proving that there is no amendment. Okay, that's why I'm scrolling the ender topics here, and I'm just explaining the amendments. Okay, that's fine. Anyway, you can relax. There is no much amendment happened in exemption chapter. Next one is the time of supply. There is no much amendment. There is no amendment at all in exemption chapter. I have given the summary here: time of supply goods and time of supply services. And before that time of supply, you have to know what is the last date for issue the tax invoice. Then only you can clearly understand the time of supply provision. That these are all I'm not going to discuss here because I'm just giving explain the amendments only, right? Okay, there is no amendments. No amendment. So time of supply, you can just follow whatever you studied before. There is no changes. Okay. Next one, ITC chapter. ITC chapter got some more amendments. Okay, that we'll discuss in detail. All of us know that what is ITC and utilization, etc. So section 16 talks about the eligibility and condition. Who is eligible? Those section 16, section 1 talks about. This is the heading. Okay, if you read the heading properly, you will get the section also. Eligibility and condition. Section 1 talks about the eligibility. That means who is eligible, a registered person. Okay, and section 2 talks about the condition, like condition for taking the ITC. And here the important thing is that they have inserted rule 36. Okay, rule 36 is that all of us know that suppose a person, okay, Mr. A actually listen. Suppose Mr. A supplied some goods to Mr. B, and both are registered person. So what happens is that Mr. A will have to file the GSTR 1, and the details of GSTR 1 will be automatically parked in the GSTR 2A of the Mr. B. Okay, so what happens if, for example, Mr. B has the invoice, Mr. B has paid the GST amount, like everything, but for example, while filing the GSTR 1, Mr. A made some mistakes. That means that he entered GST number of Mr. B wrongly. So what happens is that this will not get reflected in the GSTR 2A. That sales will not reflect on the GSTR 2A. So the question arises whether Mr. B can claim the GST which is not reflected in the GSTR 2A. That they amended rule 36. Okay, so they're saying that they put a restriction in there. Okay, they put a restriction for claiming the ITC which is not reflected in the GSTR 2A. So let's analyze with an example. Suppose okay, the example is that 1 second. Okay, in respect of the invoice in hand and uploaded by the supplier. That means you have the invoice plus your supplier has uploaded the invoice. So that means that might have reflected in the GST 2A. So 100% will be eligible. And in respect of the invoice in hand, invoice must be there, okay, but not uploaded. Not uploaded, that means 10% of the eligible ITC, but should not be exceed ITC available in respect of the invoice not uploaded. So what happens if, for example, we can discuss the example. Before earlier it was 20%. Now they reduce it to 10%. That is amendment happened for your attempt. Okay, Mr. A receives 100 invoice involving GST amount of 10 lakhs for the month of two cases. Okay, two cases there. One is that a supplier uploaded 6 lakhs. That means, listen everyone, here in the month of October, he genuinely has 10 lakh GST, 10 lakh ITC, 10 lakh ITC. But in GST 2A, what happens is that only 6 lakhs. Case one is that only 6 lakh GST has been reflected. That means this much only uploaded by the supplier. So what happens is that he cannot take the entire 10 lakh because only 6 lakh is came in the GST. So how much he can take with respect to the 6 lakh? Okay, with respect to 6 lakh is that he has the invoice for the 6 lakh plus it is reflected in the GST. He can take 100%. So 6 lakh fully he can take. With respect to 4 lakhs, 4 lakh is that amount which is not reflected. 10 lakh minus 6 lakh not reflected. With respect to 6 lakh, he can take what? He can take the 10% of the eligible ITC. Eligible ITC means amount reflected in the GST. That means 6 lakh into 10%, that comes to 60,000. So how much he can take? 6 lakh plus 60,000, total 6 lakh 60,000 only he can take. Out of 10 lakh, he can take only 6 lakh 60,000. Okay, that is the first example. In second case number two, suppose what happens is that case number 2 says that they uploaded 9.5 lakhs. 9.5 lakhs they uploaded. So what happens in that situation? With respect to 9.5 lakh that is reflected in the GST, they can take the entire things. How much amount is not reflected here? How much amount it is not reflected is that okay, 50,000 is not reflected, right? So total 10 lakh is there. Out of this 10 lakh, 9.5 lakh is reflected. That means he can take the 100%, that is 9.5 lakh. With respect to the point 50,000, with respect to 50,000, how much he can take? Effectively speaking, 10% of the 9 point. That means that comes to 95,000. But he cannot take the 95,000. He can take 50,000 because if we take 95,000 plus 9.5, that comes beyond 10 lakh. That should not happen. So he can take 50,000. So total 10 lakh. Okay, that is the example that you can go through. That is rule 36. Okay. Now another amendment is happened in ITC chapter. Let's see that this is not recent amendment. This is not amendment happened for your exam. Okay, because exempted supply section 70. Section 17 is that apportionment of credit and block credit. So apportionment means if you actually purchase an input and you paid GST and you claim ITC, but that input is used for exempted plus taxable, then now you have to apportion because the GST relating to exempted supply you cannot take. Okay, so for that purpose, exempted supply does not include a schedule 3 item except sale of land. Okay, that is the another thing you have to understand. And another amendment is that actually see, these things are not recent amendment that actually amended even last attempt, but because of its importance, I'm just given another blue letter. So this is not a recent amendment that you can. I'm sure that all of you might have studied this amendment, that is 13 less than or equal to 13%. Okay, etc. So anyway, this is not recent amendment, so I'm not going to discuss that. This has happened not even last attempt, but even before that. Okay? But that is very, very important. That's why I given in a different color. And apportionment of credit, you can just go through that. This is a procedural aspects. Okay, for procedural aspects. That's it. The amendment actually, they made so many amendments, but in my view is that there are a lot of confusion. Actually, it is there. So let's wait for a clarification as given here. Okay, that's in my opinion. There are a lot of confusion still remains. That's why I'm given a note in that way. Anyway, in session 17, as inter-level students, you don't have much amendments because you won't be getting that much high-funda questions from that area. So you have to go through the basics of this. Okay, in that there is no amendment applicable for inter exams. Okay. Now another new section, rule 86A, they have inserted. This actually you can expect as a theory because there is nothing to ask in problem like questions. So you can expect a theory from this area. So this actually what they're saying is that the commissioner or the department can restrict the ITC if it found that ineligible. They can directly restrict. So that you can just read this. This is the another amendment happened in ITC chapter. So ITC chapter amendment is very few, because we have actually which all amendments we have seen so far. In section 16, rule 36, that's the important amendment. That's only amendment happened very importantly. Section 7, I told you that this is one small amendment. And next one is that this is not amendment. I told you amendment actually happened to attempt back, but it's very important. That's why given in a different color. And next one is here. I told you that for inter-level student, you don't have to worry about this. Okay. Next one is that ITC. ITC, I told you, this is a theory type of amendment. Okay. Anyway, because I've not that much time to discuss in detail. That's why I'm just going for so fast. And section 18, you don't have much amendment here. And here 18 subsection 3 clarification in case of demerger. Demerger, how to apportion the ITC. They're given a small clarification here. This also inter-level students don't have to worry, because you won't be getting that much of question at inter-level. But final students have to worry about that, because you will get a question. Okay, that is section 18 also does not have any important amendment. Okay, utilization of ITC, that there is no new amendment happened, so you can just follow whatever things you have studied before. Okay. Next one is value of supply. Value of supply, section 15 of the GST Act. In value of supply also there is no amendment. You can see that there is no amendment happened here. No amendments. Okay, so easy. Value of supply, there is no problem. Registration under GST, and in my material, those who have had my old material and new material, you can see a lot of difference in registration chapter, because I was getting so much of question from the student side and other persons. So what I thought is that I've given some common doubts here, so you can read the doubt. Whether you have that doubt or not, you can just read the doubt and you can clarify it. Okay, so that is it. Next one is that let's see any other amendment in registration chapter. This 40 lakh, actually this is not a recent amendment, that also happened in before. So this is not a new amendment, but there is actually some confusion. Okay, I'm given that confusion here. I don't know whether you got that confusion or not. You can just read this note, so you will get that confusion. Okay. What is the amendment then is that this 40 lakh is actually for goods, and they're saying that for this 40 lakh limit, you don't have to include the interest portion. Okay, interest portion for 40 lakh computation, you don't have to include the interest portion. But my question is that what about the other 20 lakh limit and 10 lakh limit? Because they said that for 40 lakh limit, interest is not included. But what about the other limits? Because that may be what mistakes, etc. Anyway, we will let's wait for a clarification. Okay, so that is the another thing, and there is no much amendments because these are all happened in last attempt. So there is nothing new to learn for the upcoming attempt. I've given a funny analysis. Who is more powerful? Section 22, 23, 24 that you can go through. Okay, so this is 23 also does not contain any new amendment. Section 24 also does not contain any new. Okay, those who don't study section wise, I'm just telling you that in registration chapter we have mainly three sections: section 22, 23, 24. Okay, section 22 is a normal provision. That means normally when a person has to register under GST, when his turnover exceeds the 20 lakh or 40 lakh or 10 lakh limit. 23 is a relaxation section. 24 is a compulsory registration. That means but when you're studying, first of all you have to read section 22, then you have to read section 24, then only you have to read section 23. Okay, because otherwise you will get so much of confusion. If you follow this order, it will be better. You will have better clarity, because section 24 says that some situation you the person, irrespective of turnover, he has to compulsory register. But section 23 gives so much of relaxation. So if you read section 23, if you read the relaxation first, you won't be understanding why this relaxation is given. So because first of all you have to read the section 24, then only you will come to know why that relaxation is given. Okay, so you have to follow that order. Anyway, there is no amendment happened in that area. So I'm just comparing session 24, 23 that you can just go through. These are all some common doubt that students will keep asking me. So I've put all the doubt as a question and then I only clarified. So you can just go through. And registration process, there is no amendment. And there is another small amendment happened in registration procedure. Earlier, while we submitted the registration application, we had to submit the bank account details forthwith. Forthwith means on the moment you are actually uploading the registration application, you had to provide the bank detail also. But now it is rule 10A says that you don't have to provide the bank details as and when you are actually applying for the registration. That you can, after registration, you got the registration. Then only you are required to submit the bank account details. That time limit is there, 45 days from the grant of registration or due. Next one is okay. These are all. There is no amendment. No amendment. No amendment. There is another clarification they given. What is the clarification is that they said that a person applied for cancellation. Okay, suppose you applied for cancellation on 1st July. So the department says that the moment you applied for cancellation, your registration will get suspended, not cancelled, will get suspended. And they said that the person whose registration got suspended shall not make any taxable supply. Shall not make any taxable supply. You can see here. So everyone got confused. How the department can say that you should not make supply, because we are not cancelled, we are not stopping the business. We just cancel the registration. Okay. So we cannot stop supplying the goods, correct? So they clarified that what they actually intended is that during the time of suspension, you should not issue tax invoices. It doesn't mean that you should stop your supply. It's not like that. You should not issue the tax invoice. That's it. Okay. That was a clarification they given. And next chapter is that tax invoice chapter. There is no much amendment. You can see there. Okay, this is how a tax invoice looks like. That you can just go through, and that's contents I given here, and manner of issuing tax invoices that I given here. That's okay. That's not an amendment. I'm just giving clarification there. Then any amendment is here. Let's see that. Okay, mandatory electronic ticket. Okay, sometimes e-ticket is necessary. Okay, I've given below, I think. Here, preparation of e-invoices. E-invoice actually, e-ticket is totally different. Okay, I'll tell you that. This multiplex screens, okay, that is cinema theaters, the multiplex screen, they have to mandatorily issue the e-ticket. That is a new clarification that they actually they have to issue mandatorily e-ticket. That is the one amendment. And digital era, so mandatory preparation of e-invoices. So you can just expect a question, one word question, who has to mandatorily issue e-invoices. That is turnover is 100 crore or more. Okay, you can just go through that turnover limit. So next one is that QR code. Like QR code is actually that also necessary for some people. That is 500 crore. So you can just remember those two words. E-invoice is necessary for the people who are having more than 100 crore turnover, and QR code is necessary for people who are having 500 crore turnover. So that is the two things you have to understand. That you can just go through. What is that e-invoice? What is QR code? Everything I given there. Next one is the e-way bill. E-way bill also does not contain many amendments here as such, because there is no much amendment in fact. Okay, this is actually happened in last attempt, validity of the e-way bill. Okay, that you can just go through. Then payment of GST. Payment of GST, there actually amendment is happened. I'll tell you that what is that amendment. Earlier, we couldn't set off the income or amount in one head to the another head. Suppose This is actually talking about the cash ledger only, not ITC, cash ledger. Suppose you wanted to pay IGST tax amount, but while you making the challan, you mistakenly deposited interest amount. So the thing is that your cash ledger will be having interest balance, not tax amount, but your liability is towards the IGST tax. Earlier you couldn't, you could not have utilized the interest amount to pay that tax amount. But now, or I'll give another example. You wanted to pay IGST tax amount, instead of you paid CGST tax amount. So the thing is that earlier the cash ledger balance of CGST tax, you were not able to set off with the IGST or whatever. Okay. So now all the restriction has been taken away. Now you can utilize IGST, electronic cash ledger balance for anything. Okay, there is no restriction. You can utilize in between minor head, you can utilize in between major head, no restriction. That is the what we say amendment there done. So you can just go through that. That is amendment. This is a very important amendment that you can expect a question also from that amendment. Next one is amendment happened where there is no such amendment in payment of GST chapter also. Okay, that's only amendment that happened for that also. Now last one is return chapter. Return chapter actually. They keep on changing the return chapter. Literally when we say that by the time we finishes this chapter, they would have other type of return form might have come. That is a way return chapter is changing. But anyway, for your exams, there is no much amendment. Let's see any amendment is there. Just for understanding the return or related things, I given a small picture, picture things. Now GST 1, there is no new reason amendment for your exams. This actually returned during the October 19 to March 20. They're given a lot of relaxation for this period. So that is applicable only for that period. So you can just go through that. You don't have to study that very importantly, because that is applicable for that particular period. So just a 3B is there. 4 is there. There's not much amendment for this exam. Okay, what I'm hoping is that you updated with the amendments till the last attempt, because I'm capturing only the amendments that is happening between the last attempt and this attempt. Okay, so that is only I'm discussing. That is why I'm telling there is no amendment. And you cannot expect me that you have studied 2-3 attempts before, and then there are a lot of amendments. I'm just this session covers only the amendment that have happened in between the last attempt and this attempt. Okay, last attempt means what we say May 2020 and this November 2020. That only amendment applicable or amendment happened during that period only. I'm just covering. Okay, I'm just clarifying that, because when I'm saying that there is no amendment, you will get confused. Okay, only there is no amendment. Amendment were there for May attempt. There are a lot of amendments were there. So I'm hoping that all of you have captured that attempt. Otherwise, if you have my material, means I've already updated all those amendments. Okay, so you can go through that. Okay, so there is no much amendment here also. So all the very best. So this is the only amendment. Why I've decided to do a video, this is that I'll tell you. Okay, so this is the only video, only amendments, not video, only amendments in GST. Okay.
Okay, so this is the entire amendments that is applicable for your upcoming examination. So the important motive why I've done this video is that I was getting many messages from students saying that asking that there are a lot of amendments. So how can we attempt for how can attempt for exams? But I want to prove that there is no much amendments that you don't have to worry, because if you already caught up all the amendments that is till the last attempt, the very few amendments only you have to cover. And so I've proven that with chapter wise where all amendments happened. So there are very few amendments. So don't worry. You can easily go to exams and you can score a great mark. And once again, don't worry about how the institute is going to conduct the examination, because anyway, if the institute conduct the examination, you will have to write the exams like other students. So everybody is going through the same situation. It's not specifically for you. Okay, so think that this difficulty is for everyone, not only for you. So study well, prepare well. Thank you very much. Okay.